Hello and welcome, everyone. It is Saturday, the 6th of December, I think, right? Yeah, Saturday, the 6th of December, 2025. I'm your host, Jason Allen. This is my weekly performance summary for the week ending 12/06, 2025. And I'm, of course, sponsored with Net Winning Trader, my personal online trading library of my sum total of trading knowledge. The vast and incredibly descriptive online library of trading protocols, netwinningtrader.com. If you consider yourself a serious trader, having someone who's trying to get rich doing this, I admire your confidence. And it's going to be a long journey, and it will take some time to learn what to do and what not to do. And if you anywhere along that journey and you're realizing this isn't just about the charts, this is about how I think, how I perform, how I discipline myself. How do I get better at X? How do I get better at Y? That's the whole basis for what I focus on. And when I show you in this weekly performance summary, is I want to show you if you really fully understand what you're doing. In fact, if you've been able to answer this question, if you know why you do what you do the way you do it, when you can have that thinking process solid in your head, I believe making money should be effortless. And this is a week that shows that basically that's what happens. So if you're serious about where you're going and where you want to be, I've got some nice tools to help you get there. I'd like you to check it out. Maybe for you, maybe not. But one thing is absolutely certain: the results are what you're looking for. So let's go ahead and get to weekly performance for this week. And for those of you that this is a first time look at this business, I want to remind you everything in here is real time performance. This isn't hypothetical. This is real time performance in real accounts. And all that is documented. It doesn't reduce the risk or eliminate the risk because there is no way to do that. One of the big fallacies that people have in trading is that there's some secret to reduce the risk, and there isn't. So this is a risk investment. Once you know how to manage your risk, you're usually on the right track. So let's see how well we did, and hopefully we'll open the door to working together a little more closely. All right, so I'm going to talk about the numbers for this week first. That's what I call my closed trades. The only trades that really matter are the ones that are closed and have become part of your equity, your net equity. So that's what I talk about first. So total long positions, 15. Total short, 11. Total trades, 26. This is a big week for me. What happened this week is everything that I've been holding for the past 2 weeks got come together, got stopped out or taken out at limit orders. So what tends to happen is I'll put a winning position on. I'll have a handful of losers around that one as I'm holding a winner, and I'll add to it, and then we'll have to maybe add to it again, and the losing trades are subtracted out. So typically I'll have loser week, big winning week, loser week, loser week, loser week, big winning week. And that's typically what happened. This time it was a big week of trades with some good gains. Take a look at our losses first. They were pretty reasonable. 14 total losing trades for a total of about 300 pips lost. That's an average of less than 22 pips per losing trade. Very important because keeping track of these metrics keeps you in the probability of ruin matrix, which is really important. If you're not familiar with the probability of ruin matrix is, I talk about that in my Psychology of Trading coursework, which is on the Net Winning Trader website. So if you want to have a look, please do. For closed winning trades, 7 wins on the long side, 5 wins on the short side for a total of 12 winning trades. Almost 1,000 pips made on the winning side. So between the two, total net gain for the week, 647.6 winning pips. For those of you that want to know, why do I talk pips and not dollars? That's because you can scale this to anything you want. If you're a $500,000 account and you can trade $10 million positions, how much would 600 pips be worth to you a week? So anyway, scaling this is what this is all about. So the number that they're closed, nice winning week, 647.6 pips. This is a new high in equity for this time frame. In other words, if you were to look at when I started doing these uh, broadcasts and where we are today, this is another net high, another new net high. Let's have a look at what we're holding, and this is into next week, which is going to be a typical slow heading into the holidays week. I'm not expecting these to hatch really big, but I do expect to get something from them. So on the open positions, I'm holding short pounds, 33.61.9 with about 25 pips in it. Didn't really go anywhere. I'll show you that when we get to it. Short euro, same thing. Didn't really go anywhere yet, but we're holding over the weekend. Nothing in yen. Could not get my position off in yen. And then Canada, we're long from the bottom of the market, 38.37.3, right at the lows for the week. Unfortunately, still holding there. A little bit of a loss. Let's get to the charts. Oh, I'm sorry. Total open and trade equity is 30 points. So it's nothing really big going on here. It's basically flat close into the weekend. Here's pounds. I tried to give as much room as we could here from last week. Last week and the week before, you can see where it says out right here. Right here, this little green line right here. Let me get my pen up here for you. This little green line right there, that was the third position added from back here. 2 weeks going back. The actual positions are down here. You can't really see them. But where we're out here, you can see this little wiggle as the market went down under the previous Friday. That was a kind of a bad beat there. Because you want to keep your stops back about the past 72 hours. So, I mean, for the Tuesday, back in the last Friday, we got under there. I thought that was it. It was over. This high print right here, I did have a short position working. I don't know why it's not recorded, but it was there. And then that was taken off at break even right there as the market rallied. I did put the longs back on, two of them right there, as we held the trend line and held the 200 bar, which is still rising. And we got a really nice move into previous support resistance. That's what these blue lines are. That was the target on the trade. So you can see where it says out just under there as the market moved into the highs. So that's where we took off most of the gains for the week on pounds. And then, of course, the X's here said it's time to go short. And it was taken out here. I don't know why the out isn't listed. I got to make sure and double check my notation. And then I also reshorted right here at the end of the week, ignoring these buy signals. They're late. So we'll see where this goes at the end of the week. In the next week, it's going to be a quiet day, but I think the important issue is this. We held the support resistance area. We traded through it. Immediately was knocked right back. And I think that means the sellers are taking control right around the 33.60 area. Here's Euro. Is almost the exact same scenario. Here's our long positions held from previous weeks. Added to it Friday. Added to it again here. This H reversal here, we did do a sell on that, and we were able to take a break even there. As the market approached this high print at this double point here, I decided to take it off. Over here, I'm looking at this going, should I just take this off? And I'm thinking, well, it did the same thing in pounds, right? Except that I waited a little longer in euro. So I took it off, and then the reversal patterns came on again, and we traded those, and we're good. Ignoring these at the end of the week. So we're not really doing that well yet, but this is what I think is really important, and this is why I think my instinct was right, is the 50 bar is rolling over. Even though the market is holding uptrend, the 200 bar is still rising. The 50 bar reached its zenith in distance from the 100 bar during the Thursday evening trade. And then the 50 bar began to roll south after topping at the top of the market. That to me looks a little bit more like Just didn't seem right. With the failure of pounds to hold above support resistance and the failure to do the same in euro and the rolling over of the 50 bar, that to me says, that it looks like the momentum in the marketplace is faltering at the highs. Well, that would typically mean the sellers are about ready to take control. So anyway, holding the short positions from the short signals near the highs, and their open trades are starting to work. Good clue with the rolling over of the moving average. So we'll see if that really takes a hold early next week. Yen, interesting week in yen. Yen has been a textbook case of follow your signals. Just follow your signals. And it's also been a textbook case of why you've got to maintain your discipline. Because you look at these sell signals. I mean, what more do you need, right? So you want to follow those signals. But here's the problem. Look at the bad beats. Right here, they came in short. These are my short positions from last week. We didn't take this X. Remember, we did not take that X because it was too close to the entry points. So we'll just scratch that one right out there. We don't need that one. All right, so all the way until midweek, we didn't get reversal patterns start until midweek. Right here's X and an H. Interesting. So here's what happened. Follow the signals. I got stopped out right here by following the signals. So we followed the signals. The market moved above the 50 bar and then above the 100 bar. I had a tighter stop. I had the 50 bar stop working instead of the 100 bar. And I re-added the shorts on the 100 bar, right? These I put one on there, put one on there, and then the market came down to the point where our X reversal went live on the buy side. Did not make a new low, so I covered the shorts. Then it made the new low, took us out of the X. I'm flat. Now the H reversal comes on. Market makes a move to the upside. Now I'm long with a nice open trade gain. Market crashes. We're out at break even. Once that happens, the very next bar is an exhaustion move to the downside. Look at the size of that wick. Just huge. Closes higher right there. Entry order right there. And this never got filled. In other words, the entry order on this bar, if you notice this big wick here, this is a mistick. The market closed. The rule is to get long opening on a retest of the open plus I think 3 pips. So there was the actual entry price it was supposed to be at. The market opened this high print, had one tick lower, and then rallied away. It never traded to this entry price that you see right here. This is a mistick. The bar after the exhaustion bar, that's a mistick. So I don't want you to get too excited about that. I would have loved to have gotten that fill because you can see, even with the mistick, it would have been fine. But we were unable on that order, and the market moved all the way up into here. And this is the key now. On a Friday, closing above the trend line and closing above the 100 bar. Even if it's a tiny little dollar amount, that still counts. Here's our trend line. By Friday afternoon close is down here. We're above there. The 100 bar has come out of the trend and is flattened out. Now it's beyond the trend line. You see that? We're beyond the trend line now. And that is just, well, and let's not forget, we have one of our big clues right here. 50 bars rolling over and possibly heading north. So I think the move lower in yen might be over. The toolbox found us some reasonable entry points, but we just got, again, a couple of bad beats. The entry price was the right price, but the market didn't get there just by 1 or 2 points. So otherwise, we'd have been long. And if we look at Canada real quick, Canada, we are long. This was an interesting week. Remember I told you You just want to follow your signals. Wow, look at some of these signals from the toolbox. Just flawless. Strong trend sells. Never moved above the signal point. Look at that. Just great, great sell points. Which I would have taken if I was short from the reversal pattern, which is over there. Since we're not short from above there, again, a bad beat, got taken out on a minor retracement. So the reversal pattern never stuck. I wasn't short coming into this week. I would have added right there and right there. This X reversal, of course, you got to take that because where is it? Right at the previous support resistance level. Perfect place to go long. Well, there's your entry. And the market did indeed give us a little bit of room. But then, boom, came right back into that support resistance area and then eventually broke it for a loss right here. However, textbook entry. Market comes down to previous support and resistance level. Toolbox says, hey, this might actually hold this time. Stop is out of range. Perfect. On the first retest, we were rejected. Came right back into play. So I'm thinking that's a good sign. Second rejection didn't happen. The rejection was rejected. So we move down lower. Look at this move on this bar. Just high volume and good push. Look at the distance it covers. And no look back. All the way into the lows. We started moving sideways right there at the end of the day. Well, nice. Another H reversal present. So we took that, stop out of range, but then the next two bars into the close, just showing that the sellers are relentless as we head into Friday. I would not expect follow through on this. I think this was all euphoria. Once the market broke that previous support resistance low area, this is euphoria. This is like, oh my God, we're going to zero. It's the cause of cancer. No one's going to want the Canadian dollar again. So that may have been what happened. I don't know. But I think our H down here is telling us something. We'll see if it works. If it does, we should see a move back to this previous support and resistance area here and a move back above it early in the week. In other words, these shorts, how often are losers disappointed? They're usually disappointed in the very same day. So if they're not disappointed by that, it's going to be the next day or maybe the day after at latest. So this big move to the downside, it should disappoint the shorts Monday or Tuesday. So that should happen fairly quickly next week. If it doesn't, it'll be a loss and we'll be on to the next trade. But I would look for this to have a little bit of upside action early Monday, and then by Tuesday back above here somewhere. That's what I'm looking for. And that's all she wrote for the week, guys. Thanks for coming. Don't forget, I'll be posting my performance every Saturday. And again, if you consider yourself a serious student of the market, serious trader, I want you to check out my website, Net Winning Trader. You probably already know this, but for those of you that are watching maybe on YouTube or one of the other channels, don't know this yet, I do a free broadcast, a daily podcast, Trader's Daily Discipline. You can sign up at the link provided, or you can go to Apple Podcasts or Spotify Podcasts and just search netwinningtrader.com, or you can search Trader's Daily Discipline. It'll be there. So in between now and the next time we chat, guys, have a great rest of the weekend. I'll see you on Monday the 8th for Trader's Daily Discipline. And in between now and then, I hope you enjoy the weekend. Don't forget, on Sunday, it is Pearl Harbor Remembrance Day. Hopefully, some of you younger traders were taught about Pearl Harbor and its significance in your education process. If not, take a minute and find out why Pearl Harbor is remembered on the 7th of December every year. Guys, have a great day, and I'll see you next time. Thanks.